In real life, the rich get richer and the poor stay poor. And unfortunately, in Forex trading, it is a similar scenario. People who are wealthier and have much more money, have more resources and much more wiggle room than people who have smaller amounts of money. So let's take a look at a hypothetical wealthy person. So this wealthy person hypothetically has 100k in capital. And let's say that they have 10% acceptable drawdown. So they have 10k to play with. With that $10,000, they can have a portfolio of different robots. They can have different currency pairs, different strategies, trending strategies, range-bound strategies, a diversified portfolio, because that is the ultimate key to success. Having different portfolios, different expert advisors that thrive in different market conditions. Unfortunately, not everyone has tons and tons of money. Let's say you were not as wealthy and you only had $1,000 to play with. You are severely limited in the number of robots that you can purchase, but you're also limited in the number of strategies you can do, because with $1,000 wiggle room, you can't have just a 10% drawdown, which is $100. So you need to risk more of your account. Let's say you're risking the full 100% of your account, which means you only have $1,000 in wiggle room. It's very hard to trade high risk expert advisors that have multiple entry points. You're sort of stuck to low risk expert advisors that have a single take profit and a single stop loss. For example, the Night Hunter expert advisor here, which I have been running for a year now, you can see the account is very small because it trades very small lot sizes and can be traded on smaller accounts. However, you also notice that the equity chart is quite jagged, and you can have months and months of stagnation where you're not making any new high profits. Compare that to high risk expert advisors that have a grid and martingale. For example, the Waka Waka expert advisor. You can see the balance line is fairly smooth. However, what you need to pay attention to is the floating profit and loss. And you can see for this account, we saw a maximum drawdown of about $300, whereas our profit has only been $150. What's great about grid martingale expert advisors is that the profits can be slow and steady if you trade it in small lot sizes. I have a trading.com account of $1,000, which I have been struggling with in the past few months because I am very, very limited to the type of expert advisors that I want to trade. This is a company that is not a prop firm, but offers you to trade your way into hedge fund capital. And I started with them a few months back, and I chose the $1,000 deposit option. And even though trading.com will put $9,000 into the account to match your $1,000 to total up to a 10k account, effectively you are still limited by the $1,000 initial capital that you put in. And the scaling for the 5 different stages that trading.com offers looks a little bit like this. So I put in $1,000, trading.com puts in $9,000, totaling $10,000, and the target is a 20% profit, and the drawdown is a 10% drawdown. And then out of that, when you hit the 20% profit, you get 80% profit split, so you get a total of $1,600 in your pocket, and then you move to stage 2, and you don't have to put any more money in from stage 2, 3, 4, and 5, but the next step, the trading.com will now put in 19k, and again you have the same profit target of 20% and the same drawdown of 10%. And if you beat stage 2, then you get 3.2k, stage 4 is 5.6k, and stage 5 is 9.6k, and finally 20k at the end, where you will be eligible for hedge fund capital. Unlike other companies who have a billion rules designed to make you fail, like no holding over weekend, no news trading, no grid trading, consistency rules, blah, 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 trading.com only have 2 rules. Hit the 20% profit target without hitting the 10% drawdown. There's no trailing rules, there's no correlation rule. You can have the exact same strategy as someone else, currently as of recording. And yes, you can use commercial expert advisors, which is what I want to do, but I've really struggled with just having a $1,000 limit. And if you take a look at my own trading account, after the few months of trading on low risk expert advisors, you can see that I am currently down about $400. $500 or 4%. So after a bit of reflection, I've decided to withdraw my funds. So of the $1,000 that I put in, I've lost about $400. So I'm still eligible for about $600 of my own money. And I contacted support and I said, hey, can I cancel my account? And they sent me that $600 back into my own trading account. And I'm going to request a brand new account, a much bigger account, so I have more wiggle room so I can use Grid Martingale Expert Advisors. There is the 2,500 option or the 5,000 option. I think I will go with the 5,000 option so I can use my favorite expert advisors in a portfolio. Like the Profit Retriever Expert Advisor, which I have been testing for the past couple of months with fantastic results. However, if you take a look at the drawdown, you can see here why it cannot work with a $1,000 account, because the maximum drawdown I saw on this particular account was $1,000. So with a bigger account, hopefully I should be able to hit the profit target within a few months. Now, if you don't have a lot of money and you want to utilize Grid Martingale, high risk expert advisors, or just have a diverse portfolio of different expert advisors, then that's okay. You can use set accounts. And if you don't know what a set account is, then watch this video right here. Thanks. Bye.